Hi, everyone. I'll try to make this a little bit short. I think everyone's quite tired. Too many presentations. So we're ATLANT. ATLANT is the world's real estate platform. We'll attempt to change the world both in terms of rentals, short-term rentals and long, as well as transfer of ownership via tokenization of property. So just a quick intro as to why this is interesting at all. Real estate is basically the biggest asset in the world. If you see here, stock market, gold, cryptocurrency, etc., combined, is smaller than real estate. Real estate's a 270 trillion market. And of course, most of it sits stagnant and doesn't really trade. But that being said, there's still 1.4 trillion of transactions every single year. What's interesting is you have such a massive market. You have such a developed market in every single country. And it's the most illiquid and the least transparent market in the world. In other words, you can hold a piece of a company. You can hold debt in a company via bond, et cetera, et cetera. But it's very difficult to hold, depending on the jurisdiction you're in, but it's very difficult to buy a fractional piece of a property or even the whole property. It takes a lot of time, it takes a lot of effort, it takes a lot of middlemen. There's a lot of transaction costs. We're here to change all this. So two main aspects of ATLANT is tokenized ownership, which is what I was talking about, and P2P rentals. I would say two of the most pertinent difficulties that people face when they look at real estate right now. So what's tokenized ownership? Essentially, what we have is, it's very, a lot of people talk about, we created, tokenized asset for this, tokenized asset for something else, but it's very difficult to prove that a particular token actually somehow links to an actual asset. What we're doing here is basically we're taking a property. The property gets checked like it doesn't, in the real world right now. So competent authority in a particular jurisdiction checks that it's free of liens, that indeed the seller of the property has rights to the property, the title is accurate, etc. Afterwards, a special purpose vehicle gets created. It's essentially a company which is created in the friendly jurisdiction to where this asset is. When I say this, there's tax optimization, etc. So then this company essentially takes the asset, and the asset actually gets put into this company. And the reason that this is done is because it's very difficult to have parcels of property, but it's very easy to have parcels of a company. It has, inherently pieces, shares. Here what we have is we tokenize this SPV, the special purpose vehicle, and subsequently shares, or I shouldn't say shares, but tokens of this property are then tradable on exchange. What we're creating is not actually a holder of property. We're not creating the vehicle that I'm describing. We're creating a platform upon which these tokenizations will take place, and exchange where essentially these parcels of real estate can transfer hands. So I'll elaborate a little further. Again, so this is very quick. What you get here is, one, when you trade, you have assurance. You don't need to, go to a notary. You don't need to go to a lawyer. Everything's already been done for you. In other words, it's been checked by a competent authority. It's been put into an SPV. It's been tokenized, and you can just trade the token without worry. You have price discovery, because basically, when an asset is tokenized, the token trades on an exchange. The token represents a part of a company, which represents a part of the asset, and therefore you can exactly know at any given time how much 1 square foot of a particular asset it costs. So if you go to Zillow or you go to Trulia, you have a bunch of offers. You don't understand where the bids are. Here you'll know the bid and the offer at any given time. You have accessibility. You can have a guy sitting in Shanghai who basically sells his Bitcoin to buy some tokens of a particular project in factory in Munich or something like this. And he has to click a button, and now he's long a piece of property in Munich. He doesn't have to go to a lawyer. He doesn't have to learn, German or fly anywhere. And then, when he's tired of it, 2 weeks from now, he can sell it. And of course, you have liquidity. This is not, obviously everyone's familiar with this slide. I don't have to explain to you. Everything's completely decentralized. All of these things that I'm talking about are stored on a decentralized distributed ledger. And obviously, there is no kind of some counterparty or centralized party that you have to rely on. Everyone has the same information. If someone tries to, change the information, the entire world will tell. I mean, similar to, how Bitcoin or Ether works. This is a part of our alpha version. This is what this is a mock screen of what a tradable property will look like. We'll have, our ICO is on the 7th of September. We'll have actually before that a platform on their webpage where you can actually log into your personal cabinet and trade in an exchange. Right now, not real assets, but you'll see how our platform works. This should come out in the next week or two. So I'll skip to the next part of the presentation. So within the same framework, we are attempting to kill Airbnb, Booking, Expedia, and all the like with one swipe. This sounds ambitious, but it's actually quite interesting. So all of these basically services have one issue. They have really high costs. If you look at Airbnb, both the renter and the rentee combined pay up to 30% of a daily stay, which is massive. If you look at Booking, if you look at Expedia, similar things take place. I mean, if you're a Marriott, maybe you get a discount and they pay, I don't know, 15 to 20%. But if you're a boutique hotel, you end up paying the same 30%. And of course, that gets passed on to, whoever's staying in the hotel. Why is it so expensive, right? I mean, it's not just, obviously there's competition. Somebody might want to lower this. The rationale is quite simple. Airbnb has 4,500, maybe it's more now, people trying to do conflict intermediation, conflict resolution. So the idea is you come to a house, you're not happy with it. You basically, they told you it's going to be a 2-bedroom facing the Eiffel Tower. It's 1 bedroom in the basement. What are you meant to do, right? So you complain. You can basically, email them, call them, and they have basically this swath of people that try to answer your emails, answer phone calls, and of course, they're concerned about you to some extent, but they just work for a salary, right? So they don't go out of your way to help you, and they cost the same amount, irrespective of whether it's peak season and they're being used or whether they're using their desk that Airbnb is paying them for. And so this massive swath of people creates a huge overhead, and we want to eliminate it. I'll explain how a bit later. So again, I'm going to show you how we create low fees. You have immutability, assurance, scalability. I mean, again, similar model to Airbnb. We're not trying to reinvent the wheel. We're just trying to eliminate this sort of bottleneck, this massive cost, and lower the 30% to 3 to 5%, which I'll attempt to show you how. So this is not my math. This is actually Goldman Sachs' math. What they're trying to say here is they put together several use cases of how blockchain is interesting and what they should do. What are some of the best use cases? This is essentially saying this is Airbnb base case and this is Airbnb on blockchain. Literally, they're saying that Airbnb should implement some of the ideas that we're doing. Except we think we're smaller and more nimble and ready to do it. So essentially, out to year 2020, you have much more adoption in the U.S. hotel, in the occupied room supply, almost double with blockchain. Lots of numbers on the screen, but bottom line is by 2020, with hotels and rooms, they have an indicator, RevPAR, revenue per room. Essentially, with I would say an optimistic view of the blockchain growth versus just regular growth of Airbnb, it's 30% with regular growth and 60% growth with blockchain out to 2020. Again, Airbnb is an unstoppable animal. As you can see, from 2015 to 2020, the projection just only goes up. If we can capture a small part of what they're doing by having 3 to 5% as opposed to 30, we think we can do quite well. So here's how this works. So on the right, we have the Ethereum network. On the left, we have ATLANT network. Everyone talks about that they're on the Ethereum blockchain, etc. Unfortunately, the Ethereum blockchain actually can't store too much. It gets clogged up, etc. So what we've done was we created some interesting features that basically within the hashing function use our network and are able to basically connect it with the Ethereum network, which everyone knows is spread throughout the world. And so we'll have basically a combination of our nodes and Ethereum. And so within this framework, we'll have a secure workflow. So basically, you'll be able to operate from a node. You'll be able to operate from just your web browser. We have an arbitration system, which I'll explain a little bit in detail. Identity, reputation, contract management, etc. So some of the main things that are interesting, some of the sort of technological features of our platform. One thing which is, to bring this down to an average human being and not a programmer, is Ricardian contracts. So both for the platform of tokenization and for the platform of P2P rentals, everyone talks about smart contracts. No one can read them. A Ricardian contract is basically, it looks like a legal document. So something your lawyer, wrote. So I mean, it's legalese, but you can kind of understand what it says. And it essentially inherently compiles into a smart contract. So I can make a smart contract, I can make a Ricardian contract with somebody, and then it'll be machine understood, which is very important with real estate because no one's going to read code. A bunch of other interesting features. I mean, I can privately talk to you about them, but one that's very important also is voting on the blockchain. In both of the systems, token holders can change various features. I mean, true DAO principle. Sort of token holders can change various variables within the platform to adjust them to market norms. So, et cetera, et cetera. So, very technical here, but just quickly I'll elaborate. So this is how the conflict resolution works, and this is how we save. This is how 30% becomes 3 to 5% for Airbnb. It's a little bit convoluted, but basically the system, as I mentioned earlier this morning, it's similar to OpenBazaar, which is basically eBay decentralized, and it's similar to BitSquare, which is a decentralized exchange. So here's what they do: instead of these people that are sitting at desks, that they get their union pay or whatever, they get their vacations, the Airbnb has to pay for their desks. What really happens here is any token holder can basically become an arbiter to intermediate the situation that has gone wrong. You showed up to an apartment and it's, like I said, 1 bedroom instead of 2. So basically the arbiter looks at the same information as an Airbnb person. But they're highly incentivized to have as many arbitrations because they in essence get paid for each arbitration. So here's what happens. You have 2 people, the lessor and the tenant. They both put money in escrow. So in case one breaks the other's TV or one lies about how good the apartment is. The arbiter also puts in an escrow. This happens in real life because they block your credit card when you stay in Airbnb. And so let's say the arbiter says, okay, I looked at all the evidence and one person is correct and the other is wrong. They essentially take a piece of the escrow of the person which is wrong, and who is wrong. And so the money that's paid for this sort of deal going through is 3 to 5%. It doesn't have to be 30% to keep this arbiter employed, because the escrow is taken outside of the equation, and essentially he gets compensated for his work from this escrow. Now, once that's done and everyone's happy, he moves on to the next case and the next case, and essentially he treats it as work. Now, I've gotten a lot of questions. Well, what if the arbiter goes rogue and just votes randomly? Or what if the arbiter colludes with one of the participants? That's also elegantly resolved. So each arbiter for each arbitration gets kind of a point. And so if someone essentially says, well, I think the arbiter is colluding, what happens is a senior arbiter with a lot of points basically looks at the situation. If everything is correct, then he just gets an extra point. If he sees that the arbiter is colluding, remember, the arbiter also put in escrow. The arbiter will lose his escrow, and the senior arbiter will keep essentially that escrow. So this keeps A, both the arbiter in check, and then B, incentivized to solve as many cases as quickly as possible, so you don't have to wait for 3 days until Airbnb answers you. I mean, again, a little bit too technical, but basically this is how our tokenization platform works. You have approved law firm, as I mentioned, check everything. You have the platform holders, which we're listing, accept a particular tokenization event. So essentially you list, someone who wants to sell a property lists it, it gets crowdfunded. It gets crowdfunded in a property token offering, we call it PTO. And then essentially it gets listed on our platform, and subsequently it can be traded freely, just as you can, trade shares of Apple and Microsoft. And again, there's no borders. There is no, dealing with attorneys. There is no all that has been done for you. It's similar, as I said before, it's similar to trading REITs. The reason why REITs don't exist on single properties is simply because, to list a REIT on the New York Stock Exchange costs over $1 million in fees per year, filing fees, etc. We can list one asset as opposed to hundreds of assets in one shell. And the reason is because it doesn't cost us anything. It costs us very little on the crypto exchange. So the question is, why not list, one asset at a time? So very quickly, this is our timeline. I mentioned we raised about $1.5 million. We just did a very small friends and family round. We're going to try to raise a more substantial amount of money September 7th. Hopefully before then, I'm kicking my CTO. We're going to have a version that you can test out on our site and try to trade some mock assets. Subsequently, we'll have a launch of our platform in March 2018. So very quickly, that's me, probably a decent picture, I suppose. I spent some time on Wall Street, about 14 years. I worked in hedge funds and various banks, trading and structuring derivatives. Neil, CFO, has massive experience over 2 decades in also global investments, specifically working with China. Dennis is a CTO. He's quite young. That being said, he built 2 exchanges which are operational right now, trading Bitcoin, Litecoin, Ethereum, and his team, which you'll see after, is a team that's been with him, or with us, I should say, for the past 5 years that have built these exchanges. They're quite young guys, but very experienced Solidity, C++, front and back end developers. We're quite a distributed team, as you see. The developers sit in Russia. The business side sits in UK and New York. Here are advisors. I would say, compared to our modest backgrounds, they're luminaries. Talia Tischendorf, she worked at LaSalle for over a decade. She's managed to transact over $2 billion of property in her lifetime. Now she works for a $2 billion fund of real estate. Gregory Thane, who became acquainted in Moscow, actually, he essentially he founded Knight Frank in Russia and has massive experience. He right now is doing some projects in emerging markets in Dubai, etc. We're going to try our first, essentially, tokenization event, hopefully with his help. These are 2 of our lawyers. Julian Zegelman is known quite well. He's a California lawyer dealing with specifically ICOs. He gave us a sign-off that we're not a security. And Oleg works for Goldsblatt. They're a primary law firm globally, specifically in real estate and specifically in securities. And we're getting the same, basically the same document for Europe. Some of our advisors, Joseph is a rocket scientist from MIT. Anyway, I overrun my time, so do you guys have any questions?
How's the tokenization of ownership of the real estate not a security?
We are basically putting together a platform. So the platform itself is not a security. The tokens, which will represent shares of a company which inherently holds an asset, we have not received a legal opinion on. And so it's possible that basically, we spoke to Deloitte and we spoke to some of our lawyers. There are several jurisdictions where this does not create a problem. For other jurisdictions, such as the US, to give you an example, there are companies such as Realty Shares that sell you right now chunks. You can buy a piece of a skyscraper. So it's just that investors have to be qualified in a certain way, which we will be doing. The only problem with them, and as compared to us, is we subsequently create a liquid exchange for this piece. There, if you want to sell, they're the only bid. So it's not a perfectly 100% foolproof legal solution for the actual property token offerings, but most of the world can buy them, and in the US with some restrictions investors will be able to buy them.